comments I need to read really quick regarding the New Zealand dollar. So Nick says Kiwi may be becoming more dependent on China and milk these days, so may not be lagging Aussies so much anymore. Well, they are dependent on milk and on China, but the problem with both of that. The problem with that is China has slowed significantly, and when China's economy slows down to sub 7% growth, what happens is milk consumption goes down dramatically. And if you're so dependent on China and milk production, well, there's an issue, right? Daryl says, I read an article yesterday about milk production, so much investment around the world. In a year or so, milk powder is going to plunge significantly despite being pretty low now, in my opinion. And so, and that's another arguing point towards a bearish Kiwi, is if Kiwi's biggest importer of New Zealand goods now is not Australia anymore, which it was, it is now China. So New Zealand is that much more dependent on China, and as China is slowing down, people are starting to go, oh, wait a second. Well, that's why New Zealand has to start cutting rates soon, is because their dependence on China is so much greater, and China has slowed so much that it's now going to really affect the high Kiwi dollars, really starting to affect import costs, or imports or exports to China, New Zealand imports, if you will. Now, one other comment. Dennis says the problem with the New Zealand is if you're short the Kiwi, you are in the wrong side of the carry trade. Is that right? That is correct. I mean, I'll give you an example. I'm sitting in the New Zealand dollar right now. I have a $1,400 profit, but $100, about $100, is in rollover fees. So when you trade the Kiwi on the short side, you have to have conviction. I mean, it's going to suck if the Kiwi goes negative on me, and then I have to pay $100 of a rollover fee too, because the rollover fee is going to be taken off the top. Or, for example, the pound New Zealand, I'm sitting in a $3,900 profit right now, but I've got 90 some odd dollars in rollover fees. Again, I have to have conviction about the trade, because it doesn't matter if I play the pound New Zealand how I think it's going to play out, I'm going to make $30 or $35,000 on this position. If I have to pay $500 in a rollover fee, so freaking what? You know what I mean? Does that make sense? I don't care about the rollover fee as long as I can make the profit I need to make. If the Kiwi drops to 68 cents and I end up making, 10 grand, and I have to pay $300 in rollover fees, so what? I don't care. You have to have conviction when you're trading the Kiwi dollar. Does that make sense to you, Dennis? So yeah, you have to be very cognizant of the rollover fee, but it's not like I'm sitting. It's not like I'm going to sit in the Kiwi dollar and be short the Kiwi all of 2015 and try to make 1,000 or try to make 200 pips. That's what carry traders do. Carry traders are, I'm an institution, I'm buying the Kiwi strategically at 72 cents, and by the end of the year I hope it's trading at 73, 74, 75 cents by the end of the year. Yes, there's going to be a lot of fluctuations, but it's trending higher, and I'm going to capture $2,000 in profits based on like a small position. But let's just say I'm going to capture $250,000 in profits, but I'm also going to make an extra 7 or 8 grand in rollover and in carry interest, right? Does that make sense? Okay. So yeah, you got to have conviction when you're trading the Kiwi. If you don't, it's a problem. Okay. All right. So anyway, Kelly says, then we have to pray the Kiwi drops fast. And if it takes many months to drop, we are paying interest every day shorting it. Absolutely. Yeah, timing's critical here. Timing's critical. That's why, like the pound New Zealand, I give you a good example is the pound New Zealand. This is the window of opportunity I've been waiting for, oh God, I don't know, year and a half, So I got long down. I keep getting long, just so you all know. I keep getting. I got long here at like 2. Ended up selling it down here. Got long here again at like 198. I sold it, down here at like 202 or something. Some like right around here. I said, nah, that's gonna fail. Damn it. I bought it again at 2 basically. Now my cost average is 206 because I added up here or up here, but I bought it at 202. I bought it at 2. Was sitting on about I don't know, 1100 pip gain. But as it dropped below 210, I added more. So now my cost average is at 206.80, and my stops are at break even. And I hope to God we don't get down to 206.80, because if we do, I'll take a loss because of the rollover fees. I'll end up losing. Right now it's $100, but I'm also, like I said, I'm sitting on like $3,900 in profit right now. Again, and if it goes to 230, I'll make 30 grand, or probably shy of that, probably more like $27,000 or something in that neighborhood. But that's how I'm playing it. And again, if I have to pay $300 or $400 in rollover fees, who cares? I really don't care. That's not gonna affect my decision making. Not if I'm timing it correctly. All right. Okay, back to yeah, Patrick says it's the cost of business. That's right. It's the cost of doing business. You know, I have to I'm a restaurant owner. I have to pay up for the lobster. I have to I have to pay for that, Maine lobster. I've got to pay up for it. I live in Arizona. I got to pay up for it, but I'm going to also sell it at a really high premium too. It's the cost of doing business. I'm paying up for the Kiwi dollar, but if the pound New Zealand runs to 230 and it runs another 2,000 pips, bingo. I don't care. Okay. Ben says, do you share these trades with the chat room, Blake? Yes. Everybody in the chat room knows exactly what I'm doing. I don't talk about the money all the time, though. Because the money is really irrelevant. I mean, it's relevant, but it's relevant, or it's relevant. It's relevant, but it's not. It's irrelevant based on size. I always just tell people, just trade according to your size. Obviously, I don't have a $2,000 trading account. If I did, I wouldn't be trading the size that I'm trading. So everything's relevant to the size that you're trading. I just try to tell people about, this is strategically what I'm buying, because you may have a $2,000 trading account. The person trading next to you in the chat room may have a $200,000 trading account or a $2 million trading account. We still trade the same way. We just trade, our sizes are obviously proportionally different. Okay. All right. So yes, we talk about all that stuff. Like, everybody knew I covered my Aussie dollar this morning when I got up. Everybody knew I shorted it yesterday at 81.30. We always there's a lot of freedom when you're in a chat room and you're amongst people that you're teammates with. All right, since I'm on that subject, and it's Friday. Hey, everybody, here you go. Say hi on the Jumbotron. Here's the chat room. It's coming up. Hey guys, you are on Jumbotron. So there's and by the way, we got some really, really, really talented traders in here. You'll see, like, Michael, really good harmonics trader. Beth, scalper galore. We call her the little Indian. We got Ziggy, and Ziggy's really coming on as a trader, and I tell you what, he does all the videos and records all the videos for us. But then we got Maria. When she's not working for Microsoft, she's in there scalping. There's Polly and Greg, who's in the UK, who eats a lot of curry, and we got Beans, and I mean, we got Sanjeev, which is great crude trader. We got Ron, who's a good equity trader, great equity trader, and trades the FX market. and the pound yen like it's nobody's business. I mean, just a lot of really great traders in here. And there's Rick. Yeah, he says Dean in Oklahoma, but it's Rick. But we and there's more people that jump in the afternoon. There's Tom. Chris, who's he comes in when he can. Well, he's always here lurking, but he's also working. Jared, who's we're going to miss him for the next couple of weeks, but Jared's a really great technician. Marie, great. She's a great trader when she's not selling real estate. So really a lot of talented traders in here, and I'm obviously Rick from Dallas, Witt. Leon, who never says anything, but when he does, I have to even stop and listen. So, really great group of traders in here. So, but I'm going to go, guys. So stop. Look, and Beth says, "Come on in. The water's nice." That's right. It's warm in here. So, just a lot of great people in there. We spend a lot of time together, and we there's a lot of times where the market's just not doing anything. And we just chit chat, and a lot of them are just they're goofing around, but we all know when to be serious, and when it's time to goof around. So it's nice. It's nice, and we pretty open to talk about things there, especially because we're all in there as a team, because we're all trying to do this together. I mean, that's what it's all about, right? Okay. Let's get started with the and thanks everybody in the chat room. I'll see you guys in there in about an hour. So we got to get started though, because we have data coming out today. So here's the euro dollar. If I'm going to go ahead and tell you I shorted the euro twice this week, maybe 3 times, and unsuccessfully too. Unsuccessfully, I know for a fact I shorted it here on Wednesday. I guess it was Wednesday. Shorted it here. I said I'm gonna just put my stops above 113.80, and I should have taken my 30 pips, and then it just ran over me. But then I shorted yesterday above the 114 level. We're at 114.20. Closed out this morning, and this is where we're at right now. Also keep in mind that we're facing some pretty critical resistance. I mean, this is previous support from way back at the beginning of the year, and you're talking about the lows of 114.50. You can see how reactive we were. Whoops, let me grab a different pen. Excuse me. You can see how reactive we were around these levels. So I know we're almost there. We're almost to the point where I need to start establishing dollar longs, not just on a scalping basis, but I need to start positioning myself along the dollar. So again, the reactive spots are here, all through there, and you can see we're right up around those same levels right now. Downtrend line that's coming into play. So as long from anywhere between here and 115 really are good selling areas. You just then you just have to figure out, okay, from an intraday perspective, how do I time myself into those trades? Like yesterday, we ran up into this resistance, and then backed off. I don't mind trading against this trend line. Most of I do that a lot. So here was unsuccessful. I think I shorted 3 times this week, but I may have only been twice. Anyway, shorted here, lost money. Shorted here, made my money back and then some. And so now any stab up here, I don't mind selling. You have to keep in mind that we can rally. If we break into new highs, we can go all the way up to this 1460. So it's all doable. We have another bout of crappy data today, and the US dollar is going to get smacked again, and we're going to see the euro back at 114. I have no doubt about that. Okay. If we do that, I probably won't short the euro today on a swing basis, but I'll tell you, going into early next week, if we can get up to 114.50, I'm going to be shorting again. Today is questionable. I'm not really too sure what I'm going to do yet here, but this is support. Make no bones about it. This low right here, 1340, as noted in the live market alerts overnight. Oops. Euro dollar maintained its bullish bias despite the fall to 1340. Near-term resistance at 1440 and 1480. Support is back at 1340. The overnight low was 1345, 1340 is really key. And if the data is surprisingly good today, we're going to break through 1340. And if we break through 1340, where do we go? I mean, if we break through that, we should test 1285 again. I don't think that's really out of the question. And that would represent a 50% retracement. So, I don't think this 38% is going to hold, although 38% is just below there, because there's going to be a lot of stops perched below 1340, probably enough to take us back down to 1285. So I will write that down just in case, because we're not too far away. 112.85. We're not too far from 1340. Okay. All right. Resistance. Let's see. So let me get rid of these lines. Those are from yesterday. I don't think we need them right now. I mean, resistance right now is above 114.20, because if we take out this resistance here, you have to imagine anybody who's short, stops are going to start getting tripped all the way through going higher. So anywhere above 114.20 becomes very dangerous for shorts. Again, I have no position in the euro right now, but I will tell you that right now it's still very bullish. Okay, even though I was trading counter trend, as I told you guys yesterday, it really is going to take a move below 1340 to kind of take off this upside pressure that you're seeing in the euro. Let's go take a look at the cable. I did try shorting the cable earlier this week, and I did get run over. But now, look at this. Ascending wedge breakdown. Yesterday, support was here. We'll have to go back to an hourly chart to kind of see it. Okay. I think we wrote down yesterday at, what did we write down? 157.30? Is that what we wrote down yesterday? $157.20. Thanks, Greg. Thank you. All right. So probably took that from, yes. This area is all. Let's actually write down, I'm going to take it all the way down to here at 157.10, because our low today is 157.11. Man, I'll tell you guys, if you want to get along the cable, this is the place to do it. I'm not gonna do it. I'm just saying. This is support here, 157.10. I'm gonna have to write down support below that, because obviously we're coming out of an ascending wedge. So coming out of an ascending wedge is usually very dangerous, meaning to the downside. So we rallied pretty close to this 50% retracement. I think everybody was trying to sell up here, myself included. As we approach 158.65, I think if everybody's looking at the same thing, saying, hey, wait, I'm looking as short as on a ride of the 50% retracement or 158.60. Well, I'm going to be smarter than the next guy. I'm going to get in short. I'm going to put in my short at 158.30. And then everybody's like, well, I know everybody's going to be trying to get in at 158.65, and then everybody's going to try to front run them at 158.35. So I'm going to put in my order at 158. So, as we rallied up towards 158, you're just starting to get sell orders after sell orders stacked up here. So it doesn't really surprise me that we stopped where we stopped. And like I said, the problem is that if we start to roll over here, I mean, okay, like a 24% retracement of this last move, that comes in at that spike low, that spike high, that comes in at 156.35. 30. 1.5630. Okay. Resistance. Oh God. I mean, look at the pound. Look at how weak it is right now. Resistance. You got to think about all the people that bought up here. How happy would they be if we get back to 157, like let's say 157.50? I mean, we really, to take the downside pressure off, we really have to get above 157.75. It's bullish, guys, but remember, just because it's in a bullish trend doesn't mean we're not at a turn. To me, it looks like a turn. Just like I said yesterday on the euro, I'm like, yeah, I go, it's bullish, but I'm shorting. Okay, we're in a bullish trend in the cable, but man, it's walking a very fine line. All right, all right. Let's go over to Swissy. So out of Switzerland, we had producer prices come in disastrous last night. Think we got some deflationary problems in the U.S. Man, negative 2.1% versus negative 0.1% expected. That's 2% worse than expected on inflation month after month. That was just horrendous. Kiwi rallied to pretty key resistance here. Okay. A lot of people playing that double bottom, which, like I said yesterday, I didn't play it, but some of you guys did. It's I don't know what that is, so I'm going to get rid of it. I think that's great because Greece, you don't really have to worry about Greece at the moment. But holding the Swissy for me, overnight is a little dangerous right now. I think Greece is a little bit closer to having some serious problems than it's I guess a little fear mongering. I'm freaking myself out enough to where I'm missing this move. But so we're up challenging probably some pretty key resistance here. Let's see. 618, 50%. That comes in at 92. Let's just call it 92.20, and then we're going to have 92.50. 0.9220, 0.9250. Support. Oh, now that now moves down to 91.75 are going to be pretty well supported. Okay, let's go look at the dollar yen. So the dollar yen has rallied in, it's from those comments that Polly sent out yesterday, and I tell you, like I said, I've been telling you, I don't. This yen is so frustrating. Look at it. This is exactly why I'm not trading the yen right now. False breakout, reverse. Okay. You go, double top, break down. You think this is good? This is it. We're going lower. Then we reverse. All right. I mean, how annoying is the dollar yen right now? I mean, I don't even know what to do with it. I really don't. Okay. So I'm going to say that 2030, 119. You guys deal with it. 119. Have fun. And for the 8th month in a row, every day, range. What an annoying currency pair. Dollar Canadian. Dollar Canadian. Okay, so the CAD, again, we're just in a range here. We went from one range to another range. Um, let's figure out where trendline resistance is because we've got manufacturing data coming out. Okay, we've got you got manufacturing data coming out. You've got uh, foreign security purchases. Okay, we're pushing right into resistance. We wrote down 120.30 yesterday. That didn't disappoint. We just went as high as 120.30. I mean, how important is that? Okay. I mean, the thing is if we break 120.30, I mean, 122 will be probably a realistic expectation if we break through 120.30. Not saying necessarily today. I'm just saying it over the course of the next couple weeks, which I'm fine with. I'm actually looking to take profits anywhere between 122 and a half to 123 and a half. 123 and a half, I'm going to get short the dollar Canadian again. I'm just saying that being long right now, I would think that a move up towards here is doable. Um, so we'll probably have some resistance at 120.60 maybe. Yeah, 120.65 is the 618. Okay, so 120.30, 120.65, and support for the dollar Canadian will be down here. Okay, when we get back from break, we're going to talk about the Aussie, the Kiwi, the dollar index. Um, Beth is going to ask about, or she asked about the dollar index, about it being I think a butterfly. So we're going to have to go look at it. I'll have to go back and read the notes, what she had said. I'll double check that. So support here, 119.75. Okay. Okay. All right, don't go anywhere. I'll be back in just a few moments. Hey guys, really quick, the euro dollar just took a nosedive. Wow. The euro, wow. Pounds, watch out, the dollar's on a tear. Be careful. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, so the euro, pushed to new lows. I'm not too sure the reason why. I think it was more of, uh, you know, probably some stops getting triggered there. Uh, dollar index is at 94. Let's go over to, I'm going to take a look at the buns really fast. They're not really suggesting that the euro dollar should be falling too much more. So, um, yeah, I don't know. I don't think I would chase the dollar here. I would, probably, but one of the other things is the Canadian continues to roll higher. The Swissy has just taken off too. These Nordic currencies have really started to move. Be careful. Be careful fading the strength. I just I'm gonna sit in what I've got. I'll just sit short the Kiwi and long the dollar Canadian. I'll just kind of sit in those. But anyway, all right. Let's go over to the Kiwi and the Aussie. All right. And here's the Kiwi. By the way, the Canadian is really knocking its head into trendline resistance. Shoot. Like right now. You want to short the Canadian? Do it right now. You know, if it breaks above 1250, get out. I'm long. I'm just saying that's an idea. That's a risk reward idea, of a trade. If you want to trade back in the direction of the trend, short the Canadian right now. You know, I'm long, but I'm not going to get out because I think we are breaking out. Obviously, I blog about things if I truly believe that's what's going to happen, but that doesn't mean I'm going to be right, and that doesn't mean we're not going to find resistance right here. Okay, let's go over to the Kiwi. So here's the Kiwi dollar. The Kiwi double top extension, rallied back, tested some resistance, previous support, failed theirs, rolled over, took out the upward sloping trend line yesterday, got a little head and shoulder pattern. I mean, let's see here. This I typically will not trade something like this, but you're probably going to have some people that are looking at it. So let's figure out where that goes. If that was your neckline. $618 comes in at 74.05, which ironically is where a take profit is that I have. So that's 74.05. I'm assuming that's where we go. 0.7405 resistance back at 75 cents. No doubt about it. If we get back to 75 cents, anybody who was chasing the Kiwi higher this week, they're going to be happy that we got back up there. They're going to be selling into strength. So 75 cents. We are still in a range. And the Aussie dollar. Well, I got out of the Aussie too early because I thought we would stop here at 80.20. 80.20 is, we were sitting here this morning when I got out. I shorted at 81.29. 81.29. I got out at 80.20 because that was my target. I was like, okay, we're here. I'm going to get out, people. So I got out. Now I'm face palming. I'm going, oh, why did I get out? But remember, we have this this megaphone pattern, and what's really key about this, I'm going to delete everything, and then I'm going to go back and redraw. So let's just drawing, remove, just because it'll help you really kind of understand what I'm looking at. So here's a 786, high, low, 786, overshoot, which happens a lot. Here's your megaphone pattern, if you will. So what is really critical now for Aussie bulls is right here. What's really going to be key for Aussie bulls is going to be around, it's 79.50. I'm assuming. Hold on, let's so I don't assume and make an ass out of you and me. See, I can even laugh at 3, 4, or 5 o'clock in the morning. Crap on a stick. Let's see. I don't like that. Um, I don't know. I mean, I don't want to write down 79.50. I really want to write down 79.75, which is a 618 of the spike low here to the spike high, because that's really, I think, for today, it's going to hold us up here. So I don't think this little uptrend that we're seeing is necessarily done. So point 79.75 resistance be right through here. You guys hear those birds? And they are happy this morning. This has to be like the last week of good weather that I have here in Phoenix, because it's supposed to be like 90 degrees, like even in the high 80s, which for this time of year, it's usually already 105 degrees every day. So I'm taking it. I'm happy with it. 80.65. Okay. Now 80.65, and we are range bound. Let's take a look at the dollar index. Beth had asked about a butterfly pattern. Let me see something. I think, and if I'm not mistaken, Beth was looking at something that looks something like this, but I'm not buying it. Because these are equal. You can't. It can't be equal. Now, what we may be dealing with here, no, we may be dealing with here. It's not even a 50% retracement. 50% retracements at 94.20. Okay, stand by for a second. I have to look a little bit closer detail. No, I don't want that. So there's a 161% extension up here. Previous support comes in at 94.20. So 94, where we're currently at, is resistance, but if we can clear that, 94.20 is the next resistance. I don't want to write down resistance of being right where we're at. 94.20 is resistance. We're in a bearish trend, but like I said, I'm thinking with the euro and like with the dollar in general. Hold on. With the dollar in general, we're trying to create a bottom here, but this anywhere from where we're currently at to 94.20 is going to be some really good resistance. We really have to clear 94.30. I mean, this is a downsloping trend line too. So by the time we get up here, 94.25 might be more in play. But um, let's move this. I want to write down 94.25 actually. Okay. Probably a great place to be on the short side of the dollar. Um, let's go to hourly. So where's support now? Support for the dollar is right here. So 93.75. We're getting into the apex, so things are getting a little choppier. 93.75. Okay. All right. So there's your bias chart. Let me go into questions. Hey, Ben asked another question.